Hey guys, just a quick video today. No live trading room, but I just want to show you something kind of interesting here. I don't know if it was a data delay or if you experienced this at all today on the futures contracts, but we had this down move on the YM. It was down about 40 points, and all of a sudden there was no data coming out of TD Ameritrade at all. And when it did come back on, it was only down 1 point, and then it just shot up here in a 5-minute bar chart. Close to 70, 80 points, and now we're up 88 points on the YM. The NQ also had something similar. There was a data, a gap here. The market just shot up, and then we were down 30 points on the NQ, but we were down close to 80 points on the NQ. But the thing about the volatility arbitrage spread that I really like is that it's really consistent, reliable. We had a very, very nice up move here today, and this kind of data issue and then these kind of sharp moves by the futures contracts individually, if you traded these individually, if you were short here, you're getting crushed. But the relationship between the YM and Q is what volatility arbitrage is all about. Keeps the, it's much more predictable, it's much more consistent and reliable when it comes to trading. So I was able to capture that move, and I'm up approximately about $1,600 on these contracts. So if I wasn't in a volatility arbitrage trade, if I wasn't in one of these, the YMNQ or the ESRTY, if I wasn't in those trades, then I was just short or long. In other words, I was in a linear position on the futures contract, then I would have gotten crushed if I was short. Of course, if I was long, that'd be great. But, when the market's down 43 points, when the YM's down 43 points, and everything looks fairly negative, it's probably not, most people will probably not be long at that position. And so then we had this huge gap here of approximately from 959 to 996, about 40 points, without any bar in between. So it happened within seconds. And certainly if you were short, you would have gotten crushed on that. So anyway, this is the advantages of the volatility arbitrage system can't be overemphasized. I've talked about it time and time again. I mention it, and I talk about it a lot in the high-level option mentoring. I mention it a lot in the trading room videos. But there isn't a better system for managing your futures trading or any kind of trading. You also use options with this type of strategy. I don't recommend it, but you can. Futures contracts are perfectly suited for this type of trading opportunity. I guess the news came out that there was a report that there was a trade. Let's see what it says. Something about trade tariffs, but see. The nice thing about this particular strategy with volatility arbitrage between futures contracts is that it's well predicted ahead of time, and the spread acts, normal. I mean, you don't get these huge gaps, and you don't get these huge run-ups with some surprise news. That's a real advantage. Alright guys, just thought I'd do a quick video for you. I'm done trading for the day. Heading off to have some fun, lunch with a friend. Have a great day. I'll see you in the trading room tomorrow.